This is the accounting paper May, June 2021. Which statement about the bookkeeping and the accounting are correct? Bookkeeping is done by bookkeeper, accounting done by the accountant. Accounting is performing periodical rather than daily. Periodical maybe is in the month or year. This is called periodical. Daily means every day. So accounting is basically perform this. Next is that accounting rely on having accurate bookkeeping record, because the first step is doing the recording. This recording is done by the bookkeeper, and accounting is using the bookkeeper information to prepare the financial report. So this one is also correct. Bookkeeping include the preparation of the financial statement. Bookkeeping only do up to the recording for the trial balance. So this one is wrong. Bookkeeping involves the recording of financial transaction. Financial transaction means debit and credit, or pass through the journal entry. So this is debit, credit, journal, and journal. So that is all performed by the bookkeeping, financial transaction. So the answer will be 1, 2, and 4. What increase owner capital? Owner capital can be the asset minus the liability. So double entry from here. Bank loan extended from the 5-year to the 10-year. 5-year, 10-year, both also non-current liability. So this one, you will not give impact to the capital. Purchase of the inventory on credit. The double entry will be debit inventory. We assume from the accounting equation point of view, because normally we put purchases, but here we put inventory. And credit, trade payable. Inventory is an asset. Asset increase. Credit, trade payable is also increased. Both also increase, no effect. Purchase of machinery by check. So double entry, debit machinery. And then credit, bank. This is non-current asset. Non-current asset increase, but current asset decrease. Both also asset, so no effect. Transfer of vehicle to business from private use. Private use means that additional capital. So debit vehicle and credit capital. When we credit capital, it will increase the capital. How a trader took goods from the business for his own use. This goods has cost $100 and $8 carriage has been paid for them to be delivered to the business. How would this be recorded in the account in the book of business? So took goods from business for own use, drawing. Goods cost $100. $8 carriage has been paid for the goods to deliver. This is a carriage inward. Carriage inward. Carriage inward is part of the purchases, which is you have to plus $8 become 108. And how are we going to record this drawing? We debit drawing account and we credit the purchases. So the amount will be 108, 108. So the double entry is debit account, drawing account, 108. So the answer should be donkey. Sula financial year end on 31st March. On 1st April 2021, there are a credit balance of 100 on Yasmin account in Sula purchases. Purchases ledger is a credit supplier. Jasmine is a supplier to Sula. have a credit balance. So if we open the Yasmin account under the Sula, this one credit balance 100. So what does this mean? This is a supplier, so we have to owing. Means Sula owing to Yasmin 100. Sula has paid. No, this one not pay yet. Okay, Sula owed 100 to Yasmin. This is the answer, is correct. Okay, the answer should be B. Okay, question 5. Hasina buy radio from Nazin at the list price of $10 each. Hasina bought 12 radio and was offered 20% trade discount and 4% cash discount. 2 radio were 40 and were returned to Nazin. Hasina bought, that means this is a buyer. This is a seller. Okay, the list price is $10. Bought 12 units, so times 12, and give trade discount 20%. So 100 times 12 times 80%. So we get the amount 10 times 12 times 80%, which is 96. So this is purchase amount. And 4% cash discount. This one when it's paid. We didn't talk about paid, then ignore it first. 2 radio were 40 and were returned to Nazin. What was the total credit notes? So since that we buy, we get discount. So we return $10 times 2 because 2 radio 40 times 80%. We had to deduct the 20% discount. So 20 times 80, so $16. Okay, next is 6. Which item would be recorded in the general journal of a bakery? Correction of an error of principle relate to the oven repair. General journal of a bakery. Correction of the error, one of it, general journal will use it. Purchase of the delivery vehicle on credit. This is also one of it for the general journal. Next is purchase of flour on credit. This one is a main ingredient for the bakery. This under the purchases journal. Return by customer of 40 batch rate. This is a sales return journal. So only 1 and 2. The answer should be A. Alisa entered the credit note she received in March in the correct return journal. How was the total of this journal record in the ledger at the end of the month? Credit notes she received. She received credit notes means that she is a buyer. Buyer received credit notes in the correct return account. So this return account refer to the purchases return journal. How was the total of this journal record in the ledger? From the purchases return journal transfer to the ledger. This ledger, where we to put in? We put under the general ledger. The total put under purchases return account under the credit side of it. So this one total will be under the credit side. So credit purchases return account. Okay. Next. 8. Which item would not be shown on a bank statement? Not shown in the bank statement. A check written by the bank marked as referred to the drawer. This will show in the bank statement. A monthly payment made for the electricity by direct debit through the bank. Okay, so bank statement should show on it. Okay, bank charge will show on it. This unpresented check is referred to the check issued by business, but bank statement not show. It could be due to the payee have not go to the bank to take the money. That's why show unpresented check. It could be due to the timing difference. 9. Which statement about a purchaser's ledger control account is not correct? Purchaser's ledger control account is act as a check on the balance of the purchaser's account. The check is referred to the purchaser's ledger. Okay. It includes transaction related to all the credit supplier. Yes, because this is to check this one. In purchaser's ledger is for all the credit supplier. It is prepared using the information from the book of prime entry. Yes, correct. It provides proof the arithmetical accuracy of the purchaser's ledger. Yes, this is what we meant for. So here they say that purchaser's account, actually this should be purchaser's ledger to check. So the answer should be A, which is not correct. Okay, now next question 10. JB sales ledger control account has a debit balance of 12,000, interest on overdue account 40, and discount allowed 150 has been omitted. Sales ledger control account has a debit balance, what down? 12,000. Interest on the overdue account. Interest overdue, let me charge into here. Interest overdue, 40. And discount allowed. And discount allowed 150 has been omitted. So discount allowed omitted, which is 150. What was the correct balance on the sales? So this one, we want to find the new balance. We take 1200 plus 40 minus 150. So we get 11890. So the answer should be B. 11. What is the effect of treating an item of capital expenditure as revenue expenditure? So here we have treating item capital expenditure as a revenue expenditure. So revenue expenditure means expenses. Expenses overstate. Capital is a non-current asset, which is understate. So cost of non-current asset is overstate. This is wrong. Cost of non-current asset is understate, yes. Depreciation for the year is overstated. No, because when your this non-current asset understate, your depreciation will be understate as well. Depreciation for the year is understate. So should be 2 and 4. Okay, next, continue question 12. Why does a business provide for depreciation on non-current asset? Depreciation is one of it. Due to the prudence concept, we need to provide the depreciation to charge the cost of non-current asset against the profit for the year of purchase. To ensure that non-current asset appear at the book value in the statement of financial position. To ensure that the matching principle is applied when preparing financial statement. So this, under this topic, you have prudence, you have matching. Okay, you have the consistency. So these three concepts apply in this topic. So here, since they did talk about prudence, they talk about matching, we use the matching. Okay, this one is not about the retain the cash. Okay, next question 13. Machinery which has cost 6,290 was sold for 3,100. The disposal account show a profit on disposal of 584. How much was the depreciation up to the date of disposal, and on which side of the disposal account was recorded? So we put in disposal account. The cost is 6,290. Sold for, that means bank amount, which is 3,001. Sales proceed. The disposal account show a profit. Profit means that in here, this is a income statement amount. How much the depreciation up to date? That means we are trying to find this credit side. So 6290 plus 584 minus 3100. So which is 3774. So the amount 3774 in the credit side of the disposal. Because which side of the disposal account was recorded? We are talking about this account is in the credit side. So answer should be C. Okay, next is 14. The following ledger account appear in the book of trader. Rent receivable, balance carried down, balance brought down, and bank. Which entry was made in the income statement for the year ended 31st for the rent receivable? So income statement amount must be in the credit side because debit rent receivable credit income statement. So take the total credit minus the debit, we get 4,000 minus 6, we get 3,004. So this amount, they say that which entry was made in the income statement? Income statement. Here debit, here will be rent receivable credit 3,004. This income statement amount will be sitting in the credit side. Okay. So 14, 3,004. They are talking about the income statement account. Next, why does a business maintain a provision for that account? This one under the prudence, under the matching concept, you talk about the rate. This is a consistency. So these three concepts always apply in here. To apply the accounting principle of the prudence, yes, one of it. To avoid profit for the year we understate, no. To have an accurate forecast of that which will be uncollectible. So this one uncollectible is accurate. The moment you saw provision, this is just a estimation. It's not the actual. So you're not sure how much you can confirm the amount until the debt become irrecoverable. To reduce the expenses of irrecoverable debt in the future. So this is not about the reason that we reduce it, because once it's become irrecoverable debt, then we will have to recognize it. So the answer should be applying the accounting principle. How should inventory will be valued? This question, or when they ask, always lower of cost and net realizable value. What is the cost? Cost is referred to your purchase price. Your purchase price plus the additional cost incurred. For example, carriage inward, taxes off. And net realizable value is the estimate selling price, your estimate selling price minus your estimate cost incurred for the selling, which is selling expenses. These both are estimate, not the actual. Okay. Okay, 17. What are the advantages of being a sole trader? Easier to raise the finance, not really. Entitled all, yes. This is one of the reasons why people want to have. Okay, next is that have total control, yes. Has unlimited liability, this is not a good thing. This is a disadvantage, basically. So now they want advantage only. So since that they didn't take this one, the answer should be donkey. Next, which item will appear in the income statement of a service account? Service is provide service. They do not have the gross profit because they don't have the inventory. Profit for the year, yes. Surplus is referred to the club account. If you saw the surplus, is referred to the club account. Okay, service business is have the profit. So the answer should be C. Now let's move on. 19. A business provide the following. What is the total current liability? This one, long-term, non-current liability, current asset, current liability, current liability. Prepaid insurance is a current asset. Accrued wages is a current liability. Rent received prepaid. Rent received prepaid, this is an income account. So this is also liability. Prepaid received, rent income received in advance is a liability. So we take this and this, add it all. 9700 plus 2000 plus 1005. So we get 13,200. So 19 is A. 20. What is added to the owner capital to calculate the capital employed? So here capital employed, we have capital plus non-current liability. So what is the added to the owner capital? So this is a capital, added is a non-current liability. On 1st April 2020, Ahmad has a provision for doubtful debt of 290. The following journal entry was made on 31st March 2021. Provision for the doubtful debt income statement. This is showing that decrease in provision for doubtful debt. In April, provision for doubtful debt must be in the debt credit side for balance brought down 290. And the following journal entry was made. That means here we put income statement 25. Means that our balance carried out should be reduced. Take 290 minus 25. So we get 265. So they asked that what was the provision deducted from the trade receivable in Ahmad's statement of financial position? This amount, 265. Okay, let's move on. X Limited started the year with an ordinary share capital of 100,000. An ordinary share dividend of 3,000 was paid during the year. Later, a further 10,000 of ordinary share issued. The profit is 8,000. By how much has equity increased in the end of the year? So I put in 2 columns because only 2 columns. Share capital, retained earning. This one 100,000. This is a balance breakdown. Okay, this is a balance breakdown. Ordinary share get dividend 3,000. Dividend is deduct from the retained earning. A further will issue 10,000. So capital issue ordinary share. Profit for the year is 8,000. So if according to individual, this one is 11,000 and 110,000. This one is 5,000. So total add up is 16. Okay, here 10,000, 8,000, 5,000. So this one should be 11,500. So compare with these two amount. Okay, the differences is 15,000. Which provider of fund to a limited liability company receive a fixed rate of return on their investment? Fixed rate got 2. Either you are the preference shareholder will receive the fixed rate of the return. Another also the debenture holder, they will get the interest. This one will get the dividend, but the rate is a fixed. This is a fixed rate. So number 23, preference share is 2. And ordinary share, this is not fixed. It depends on the company performance. Okay, 24. Every member of a sport club is required to pay an annual subscription of 50. The subscription account show the following. Balance brought down, income statement, balance carried down. What was the increase in the number of members in areas between 1st Jan and okay. In areas is referred to this one and this one. Okay, or refer to this one. One member, every member pay 50. So here got how many members? 350 divided by 50. Here got 7 members. Here divided by 50. 750 divided by 50. Here is 15 members. Here 7 members. 15 minus 7 is equal to 8. So 24 answer should be C, because they say member in areas, which refer to this information. 25. Which term is used to describe the surplus which has been earned by a club over its life? Earned by a club over its lifetime. The surplus. Which term is used? Accumulated fund. Accumulated fund in the normal business we call capital, but club we call accumulated fund. NULA provide the following information for the year ended 31st March 2021. Drawing, net asset, net asset. This beginning year, this is end year. What was the profit or loss? So since that is related to the profit, we can use capital. Drawing is in here. Net asset, which is balance, but down here, 60,500. And then this one balance carry down, 72275. So this side debit more than the credit. So we take 3900 plus 72275 minus 6500. So we get 15675. So this is the amount for the profit. Okay. Now question 27. A trader who do not keep full account record was able to supply the following information. Amount owed by trade receivable at 1st April is beginning year. Check received from trade receivable. We open the T account for the trade receivable. This one amount owed 3,000, balance brought down. Check received from the trade receivable bank amount 28,000 here. And then cash discount given to the, this is discount allowed, 1,005. Amount owed by end of the year, which is balance carry down. So with the using this information, we can find the sales amount. So take 28,000 plus 1,005 plus 4,200 minus 3,000. So we get 3,700. So 3,700. So this is donkey answer. Next is 28. A trader provide the following information. A markup of 25% applied. Markup is referred to the gross profit over cost of sales times the 100%. There is a markup. So we put in the information what we have. Use the income statement concept, revenue minus cost of sale. Cost of sale we have opening inventory, purchases, closing inventory. Revenue is 12000. Opening inventory 9600. Purchases don't know, which we need to find. Closing inventory is 10,000. This is to minus. Okay, gross profit. Okay, following this 25. This is 25. This one will be 100 because concept markup. Here will be automating 1250. So using this one pair, using the mathematical concept, we find this one. So 12000 divided by 125% times 100%. So we get 12000 times 100 divided 125. So we get 96,000. So this one 96,000. So to get these purchases, okay, we take this plus closing minus opening. So plus closing so we get this amount 96600. Okay, so the answer should be donkey. Okay, next continue. '29. George provide the following information. His liquid asset is 1.2. So this one don't include liquid asset formula is current asset minus inventory to current liability. So means inventory don't include. So non-current asset, nothing to do. So we only have trade receivable and trade payable and also bank overdraft. So following the formula 18,000, 8,000 plus bank overdraft. Here is 1.2. Here is 1. Okay. I put in using the mathematical concept, divide 1.2 equal 8,000 plus bank overdraft divided by 1. Move this 1 to there, 8,000 into here. So we get 1800 divided 1.2 times 1 and minus 8,000. Get the bank overdraft. So 1800 divide 1.2 times 1 minus 8,000. We get 700 for the bank overdraft. So bank overdraft is 7,000. Okay, next move on. 30. A trader provide the following revenue, opening inventory. It was found that the closing inventory should have been 400. So this one should be 400 instead of 300. What was the correct rate of inventory turnover? So after that, we change this one. This one increase 400. So this one will reduce 100, become 2,300. And then next is that the rate of inventory turnover is that cost of sales divided by the average inventory. Cost of sales is 2,003. And our inventory is 100 plus 400 divided by 2, which is 2003 divided by 250. 2003 divided 250, we get 9.2. 9.2 times. Next is 31. The current ratio X is 2 to 1. The current ratio of Y is 1.3 to 1. What does a comparison of this ratio? So basically, current ratio is current asset to current liability. So X has a fewer liability than the Y. Okay, we do not know whether more or less, but from here, this one bigger than this one. X has more liquidity than the Y. Meaning is that in terms of X, X has more real cash, real money compared to the Y. Next, 32. Which external party will be interested in the financial statement of a trader? Banker, yes. Consider request of the bank for the loan. Yes, they will consider about it. Trade union set a wage which increase. Yes, trade union may also fight for the employee. The business manager made decision about how to increase the profit. Business manager okay, they ask for the external party. External party means outside, not the employee in the company. Business manager is one of the internal staff. So they want external. So this one is not internal. The trader decided if the drawing could be increased. Trader refer to the owner. This is the owner. Owner is not part of the external party. So the 32 should be only two only. This 1 and 2. Okay, next move on. Question 33. Sabina run a retail business. She planned to close her business in a few weeks' time. How should her fitting and feature and fitting be valued in the statement of financial position? When we want to close the business, they say that close down the business. So we have to realize what is the, under the realization account, we have to realize all the asset and liability. So how to realize it? We have to see how much that we expected to sell. So that is the concept when we want to close out the business, realization concept. Why should a trader match his cost for a financial year with the revenue for the same period? This is under the matching concept, saying that. So the purpose of it to account for all liability, to account all the money have been paid, to make sure outstanding income is included. Outstanding income is included, yes, one of it, to show the correct profit figure. This is more accurate. So 34, this one is more accurate. Okay, 35. Which international accounting objectives are described by the following? So you have 4 objectives. Number 1 here, information in the financial statement must be free from the material error and bias. This is called reliability. Reliability. So either B or C now. User must be able to identify the difference and similarity between information in the different financial year. When we talk about similarity, differences, they're called comparability. So the answer should be B. So that is for the set that we do today.